one form of employment or the other, whether full-time, part-time, then this video is for you. Hello everyone, welcome back to Inspired Living with Modupe. This is the home for all things personal finance because your money matters, and also a place to be inspired, to get fulfilled, to be the best that you're meant to be, and also to become successful. And so today in this video, I want to talk about 5 money mistakes that salary earners make. Actually, this video will be divided into 2 parts. I'll talk about the first 5 money mistakes you have to avoid, and in the next video, which will come up next week, I'll talk about the remaining 5 money mistakes that you need to avoid as a salary earner. And so, if you are a salary earner, you are in one form of employment or the other, whether full-time, part-time, then this video is for you. And so what are the first 5 money mistakes any salary earner must avoid? Before I quickly go into the mistakes, I usually will ask salary earners these 2 questions. The first one is, for how long have you been working? The second question is, what do you have to show for this months or years of working? So I'll quickly give this illustration. Imagine you have worked for 2 years and you have been on a monthly salary of 10,000 naira. It means that at the end of the first year, the total sum of 1.2 million naira would have passed through your hands. 100,000 times 12, it is 1.2 million. And then the second month as well, another 1.2 million naira would have passed through your hands. How much do you have to show for this period? Yours might be 50,000, yours might be 10,000, yours might even be 250,000. But the question is, what do you have to show for this period? Do you have money in the bank? Do you have investment? Do you have assets? Or all you have are just liabilities? This video is for you. If you are yet to subscribe to my channel, then I encourage you to this day to subscribe, like this video, share this video, help people as well to know how to handle their personal finance and also to be inspired living a fulfilled life. Now to the first money mistake you must avoid as a salary earner: depending on only one source of income. And that source of income being your job. Stop it. Avoid it. Yes, having that first source of income is a good place for you to start. But maintaining just that one source of income as your only source of income is only a recipe for disaster. It's a good place to start, but it is not a good place to end. So while you are in this employment, start thinking and asking questions. In what other ways can I get sources of income? Can I go into look for ways of making residual incomes or creating other source of income? We could be a part-time job. We could be you monetizing the skills that you have, but you need to move from that realm of just that one source of income. Start thinking, what can I do? COVID-19, that period, has shown us that it is not wise for you to remain with only having a source of income. And so the second money mistake you need to avoid is living paycheck to paycheck. Yes, what do I mean? A lot of salary earners, they live paycheck to paycheck. What happens is they go to work for that month, they get paid, they spend everything. Some people, even before the end of the job, they tell you, money don't finish, money has finished, and they are waiting for the second month so that they can get paid. And life continues like that, is in circle. That is what we call the rat race, living paycheck to paycheck. You need to stop it. You need to avoid it. You need to start asking yourself, how will I manage my salary? This is 2021 and this is February. You have collected your first salary for the year, which is January. How have you handled that salary? Do you have anything to show for it? Or you have just spent it? The money has come in and it has just gone out like that. How have you handled it? You need to sit back after this video and start asking questions. How do I manage my money? How do I leave this realm of paycheck to paycheck? This is another money mistake you need to avoid. Yes. Moving to the third money mistake, it is when you live on credit, or when you spend next month's salary already. Now, let me give this example. I remember when I was working in the bank, a lot of my colleagues will buy suits, they will buy designer bags, they will buy designer shoes, and because they don't have enough money to pay for it now, what they do is that they'll write out post-dated checks, in favor of the person that has sold the item to them, and say, look, I'm going to pay you for this suit that I have bought, or this dress that I have bought. I'll use my salary in March to pay for you. So I give them write out a check and just write a post-dated check to fill in for what I have bought in the month of February. It is a serious money mistake that you need to stop. And that is one of the reasons why people keep living paycheck to paycheck. So whether you are tired, whether you are frustrated, whether you do not like the job, you cannot say, no, I am not doing this job again. Why? Because already you have bills that have piled up and that you need to pay. So this is the third money mistake. As a salary earner, you need to avoid. Remember, the first one is you just depending on only that source of income. I have asked you, if something should happen either to your business, to that business or that company, and they say, look, your services are no longer needed, what would you do? You have to stop living from paycheck to paycheck. Don't forget, if the salary you are told that your services are no longer needed, then it means that even things that you have already bought, or people that you are already owing, it means that you are not able to settle them. So the fourth money mistake you must avoid is what I will call lifestyle inflation or extravagant living. And what do I mean by that? You realize that a lot of people, once they get to a certain place, they'll tell you that, look, my lifestyle must just match with my income. So if before you started a job, you had only just one pair of shoes, or just a couple of maybe skirts and shirts or tops, you realize that, okay, I've started working in this place, maybe I'm working in a bank, or I'm working in a very good company, a telecommunication company. You say to yourself, my level now has changed. I need to, increase the things that I wear. My shoes, maybe your shoe was just an ordinary shoe, it had no name, no label. You feel that, look, I have arrived. Like they say it here in Nigeria, I don't arrive, and that you want to show people that you have arrived. And therefore, you lift up, your level of living and say that now I want to start wearing designer shoes. I want to start wearing designer dresses with labels, That is you increasing your lifestyle inflation. For some people, especially for the men, they feel that, okay, maybe I was just using this kind of phone. My level has changed. I need to increase and move on to a higher, range of the phone I'm using. Or maybe you are living in a lower part of, your state. For instance, in Lagos State here, maybe you are living on the island before. You feel that now that you are earning so much, you need to move from the mainland to the island. I want to encourage you at this point. When you are spending, remember that the money you spend, once you have spent it, it is gone. So rather than you acquiring liabilities because your level has changed, I'll advise you to start acquiring assets. Things that when you use money on them, they will bring you a return. These are assets. Things that will bring in money to you. Not just on things that once you spend on them, liabilities, they are gone and they are gone forever. That is the fourth money mistake you must avoid. And so the fifth and the final money mistake for this video is you not having an emergency savings or an emergency fund. I usually tell people, if you don't have an emergency saving, then you are in a state of an emergency and you need to act immediately. Yes, what is an emergency saving? As the name implies, it is an emergency, something that you do not foresee, something that is likely to happen. You don't know when it will happen, but the possibility of it happening is very high. A lot of people call so many things emergency, while in actual fact, financially, you cannot call them emergencies. Take for instance, somebody will come to you and say, please, I need help. I need to pay for my house rent. House rent is not an emergency. Why? Because you had 12 months, 1 whole year, for you to think about, and plan for getting the next year's rent. A pregnant woman, for instance, the husband or even the woman herself has 9 months to start preparing for the birth of the child. It is not when the woman is about to go to labor and then you start running here and there saying that, please help me, help me. It is not an emergency. Christmas celebration, Ileya celebration, it is not an emergency. You also have months now to start planning towards that period. An emergency is, for instance, where you lose your job. You do not foresee it coming, but it happened. During the COVID-19 last year, a lot of people lost their jobs, a lot of people lost their income, a lot of people became ill. So these are emergencies. Nobody foresaw COVID-19 coming, but it came, and it came with a lot of effects on people. So that is an emergency. It's advisable that you plan for your emergency. And how do you calculate what you should have in your emergency savings? It is usually the minimum of 3 months living expense. And what is a living expense? Ask yourself, how much do you spend in a month on your transport, on your feeding, your utility, grooming? Put everything together, add it up, and whatever amount it comes to, multiply it by 3. So if your living expense, for instance, is 50,000 naira per month, multiply it by 3, which is 150,000 naira. It means that the minimum I must have in my emergency savings is the sum of 150,000. That is what financial planners advise. But even financial planners and even people have seen, especially with what happened last year, that having just 3 months living expense in your savings account or in your emergency account is no longer sustainable. So people are saying, let us go for 6 months. Some people are even saying, let us go for 1 year. Whatever you want to start with, you need to start. It is a case of an emergency and you must act fast. So with these 5 money mistakes you should avoid as a salary earner, I would like to hear from you. What other money mistakes have you made or you see people make that you would like to share with me? So these are the 5 money mistakes I'm sharing in this video. By next week, I'll share the remaining 5 money mistakes you must avoid. A money mistake is not one that you want to make. And I'm sure you do not want to wait until when retirement is near for you to start asking yourself, what have I done? How have I lived? For you to start having regrets. Remember that a journey of 1,000 miles starts with just a step. So what are you going to start with today? What are you going to start putting in? Or which of these money mistakes have you been making that you want to stop making from today? And so until next week, when I come with the concluding 5 money mistakes to avoid, I want to ask you to please subscribe to my channel. Subscribe and turn on the notification button so that anytime I drop a new video, you are able to get it. Share this video, like it, and let me hear from you. So once again, I want to say a very big thank you for being with me on this journey Remember, be money wise. I'll see you at the top, and God bless you.